Very good morning. Please put the link in all your WhatsApp and Telegram group. People will join. Today we are going to do good amount of problems with regard to the chapter capital budgeting. So everyone please don't miss the class. Later don't suffer. Please ensure that you are all listening properly. Please join fast everyone. Another 3 minutes I will begin. Okay. We will start good amount of problems today and good problems also. Regular class law, whatever the problems I already taught, means from the study material 21 questions. Other than those we are going to do. Okay. So I'm not going to repeat same again. So even regular batch or power play batch students also, these classes will be absolutely new for you. And I have a very good news for you. Just once the class starts, I will tell you. Okay. Very good news for all the FM students as well. How we are planning everything. Okay. So just once we start with the class, I will reveal that. Definitely it will be useful for every single person here. So I will reveal just in a time. Let us first begin. Okay, we begin. Can we begin, everyone? Okay, yeah. Listen. First thing, before I start with, I waited for enough time for you. Don't blame me that I did not wait. I waited for total 12 minutes. Okay, after starting the class. So I think we are now good to go. Our target is we need to do at least 4 to 5 big questions, 10 marks questions came in exam. Okay. So first, let us take a 10 marks question which came in exam. Okay. One RTP question, one MTP question. In exam also this came for 10 marks. Numbers only will change. Concept is same. Question number 4. We will do all types of questions in capital budgeting. These type of questions, machinery related questions, incremental cash flow related questions, all we will do in capital budgeting. Okay, let us begin. A company has to make a choice between two projects, namely A and B. The initial capital outlay of two projects are rupees 1 lakh 35 1 crore 35 lakhs and rupees 2 crore 40 lakhs respectively for A and B. There will be no scrap value at the end of life of both the projects. Opportunity cost of capital, PV factor, is 16%. The annual incomes are as under. Project A, B, cash flows are given. Discounting factor is also given in the question. They are asked to calculate three things: discounted payback period, profitability index, NPV. Why we are doing this question? For two good reasons. Reason number one, discounted payback period we did not do in the previous question. In the previous question, we had done payback. We did not do discounted payback. In this question, we are going to do the discounted payback concept as well. So new concept is there. We have to do the question on that. Number one. Number two, this is a question where there is a dissimilar cash flows between two projects. Company is having two projects in hand, A and B. Okay, A and B. In that, project A is having only 4 inflows. Project B is having 5 inflows. How many? 5 inflows. So a 4 inflow project and a 5 inflow project, we are going to compare and contrast. Are you listening up? Okay, listen carefully. There is a concept in capital budgeting which is called as EAB, EAC, equated annuity benefit, equated annuity cost. Okay, in this concept also we will see dissimilar life. Similar opposite dissimilar. Dissimilar life concept we will be seeing also in EAB, EAC concept. But the concept discussion will be different there. Okay, what is the difference? See the project A. Project A, how many years project it is? 5 years. But in the first year, I will not get any cash flow. I will not get any cash flow, or I will get zero cash flow exactly. I will get cash flow, but it is zero exactly. Then normally we will do the question. Sometimes they will tell life of the project A is 4 years, life of the project B is 5 years. Then we cannot directly compare NPVs because when life is lesser, cash flows will be obviously lesser. Are you understanding that? Clear? I will explain you the difference between both of them. Okay, I will explain you the difference between both of them. See, in cricket, there are uh, the first round batsmen that have come. batsman number 1 and 2, strikers and non-strikers, and both are standing. Okay, first over is bowled. Okay, first over bowling started. Batsman on the crease, non-strikers and another batsman was waiting. Fielding was completely set. Bowler is starting a pace bowling for the first over. Okay, now imagine this way. First over, all are dot balls. Okay, all are dot balls. Maiden. So maiden over. No runs given. Okay, everything went well. And they, the batsmen also were very happy that they started playing defense only. They don't wanted to score any runs in the first over. Clear. So first over, what happened? No runs came. Then batsmen understood the pitch, bowlers psychology, how the ground is, how the pitch was, and how to score runs where the fielders were set. He took one full over. No runs given. No runs taken by the batsman. Well, second over onwards, they started destruction like anything. Okay? Keep this one way. And 49 overs, 50 overs or 20 overs, 19 overs full swing. First over maiden. Okay? Next team also started playing. Okay, opposite team also has to start an opponent. They started playing from the over number 1. Okay, but consistently they played. Okay, can I compare both the teams now? Yes, you can compare because they were given with 20 overs. These people are also given with the 20 overs. First over, you started doing maiden and later you increase the strike rate. These people started hitting on the first over itself and maintained a consistent strike rate. I can compare both of you and tell whose performance is good. Clear? Now I will take a second example. I will take what second example? Second example is two teams are playing, X and Y. India and Australia playing. Australia started playing, 20 overs completed. Rain came. They waited for 2.5 hours. It didn't go. Finally, it went after 3 hours. Then they started using scientific methods and they said, let us reduce the score and let us reduce the runs as well. Let us do everything in 18 hours or 17 hours they reduced. Are you understand the point? 17 overs they reduced. Runs they did not reduce. Let us say they will reduce. Example say they did not reduce the runs. Runs are same, but 17 overs only you have to hit. Clear? In this case, you can't compare both because you were given with a 20 over chance. I was given only with a 17 over chance. Correct? You cannot compare both of us. Same thing. Here what happened? Project A is given with 5 years life. Project B is also given with 5 years life. If 1 year you did not do any performance, second year onwards you did a great performance. That is different. I started giving my performance from the day 1 itself in case of project B. So you can compare both. When you cannot compare, see, if question comes like this, you cannot compare. See here. If question comes like this, you can compare or cannot compare. Let us see. Okay, what? See here. Cost of machine, all these. Sorry, not this. Very, very sorry. Very sorry. Just a minute. I will show you the question. Such that here itself you can understand. Okay, when to use EABAC, when not to use EABAC, you will also have a clarity. Just a minute. Give me a minute time. They did not ask any question on there, but still I will show you. Wait. See, equivalent annual cost. Okay. So this is how they will. Okay, well, see, there will be a comparison between 2 years life and 3 years life. Okay, 2 years life and 3 years life. When we come to the question, I will show you. Whenever there is a comparison between a 2-year life and a 3-year life, you cannot compare both of them directly, because obviously a 3-year life cash flows will be more than a 2-year life cash flow. Nah? Definitely. See here, 36th question also you can see. Similar footing. So, problems when we see, we will understand clearly whether EAB point is there or not. Like this, we cannot, because directly they will not use the word EAB, EAC. When we come into the question, I will only tell you, but please do remember one point. Cash flows zero is not the problem. If the life itself is lesser, you cannot compare two projects, because a higher life project will always have a higher cash flow in a particular analysis. Okay, well? So main point that you have to understand is, whenever we are trying to do any question, first observe the life of the project. Life is 5 years, life is 5 years also here. Here life is not 4. Cash flows are 4 for a life of 5. Did you understand analysis, everyone? Answer, yeah. Everyone understood? So let us start today with the question number 4. Let us read the question once before we start. A company has to make a choice between two projects, namely A and B. Initial capital outflow initially 1 crore 35 lakhs, but 2 crore 40 lakh respectively for A and B. There will be no scrap at the end, means it will not realize anything at the end of the project. Opportunity cost of capital is 16%, PV factor. Annual incomes are as under project A, project B, discounting factor. Project A life, not 4 years, 5 years. Project B, 5 years. Project A is a 5-year project with a 4 years cash flow. Don't tell it's a 4-year project. If you call project A as a 4-year project, then problem has to be done as per EAB and EAC model. Adilla what they are asking you to compute NPV, discounted payback, something like that, with the project A having 4 cash flows in 5 years, project B 5 cash flows in all the 5 years, discounting factor also they have given. Okay, we are asked to compute discounted payback. Last class we have done payback. Now we are going to do discounted payback, profitability index, and net present value. Okay, well, let us start it together and complete. Okay, well, let us start with the question. Let me take this question for every one of you. Okay, first one, what they are asking us to calculate: discounted payback, period. Discounted payback period. 10 marks question here, please. Let us do it together. Discounted payback period. First, project A, year 1, 2, 3, 4, 5. Cash flow 0, 30 lakh, 1 crore 32 lakh, 84 lakh, 84 lakh. PV at the rate of 16%, 0.862, 0.743, 0.641, 0.552, 0.476. discounted cash flow. Just a minute, I have calculator, otherwise just give me 1 minute. Yeah. So first case anyway it will be 0. 30 lakhs into 0.743, 22 lakh 29,000, 1 crore 32 lakhs into 0.641, 84 lakh 61,200, 84 lakh into 0.552, 46 lakh 36,800, 84 lakh into 0.476, 39 lakh 98,400. First of all, every student, please confirm up to here. Have you all got the same answer, sir? Everyone. Okay. Now listen. What is the difference between payback period and discounted payback? No difference here. Payback period considered cash flow. Discounted payback period considered discounted cash flow. How to do? Cumulative discounted cash flow. Total then. First year 0. By the end of second year, I recovered 22 lakhs 29,000. 22 lakh 29,000 plus 84 lakh 61,200, 1 crore 6 lakhs 90,200 is recovered at the end of third year on discounted cash flow basis. 1 crore 6 lakh 90,200 plus 46 lakh 36,800. 1 crore 53 lakh 27,000 is recovered by the end of fourth year. Plus 39 lakh 98,400, 1 crore 93 lakh 25,400 rupees is recovered at the end of fourth year. Is recovered at fifth year. Recovered at the end of fifth year. So now payback period we invested 1 crore 35 lakhs. Okay, through your discounted cash flows, during what periods 1 crore 35 lakhs is recovered? 1 crore 35 lakhs is recovered between 3 and 4. Okay, year 3 I recovered 1 crore 6 lakh 90,200. Year 4 I recovered 1 crore 53 lakh 27,000. And between year 1 and year 3 and year 4 you recovered 1 crore 6 lakh 90,200 minus 1 crore 53 27,000, 46 lakh 36,800 you recovered. Okay, so what is our discussion here? Year 3 it is 1 crore 6 lakh 90,200. Okay, we invested 1 crore 35 lakhs. Okay, in the between third year and fourth year, in that 1 year time, you recovered this much of investment. Correct? You recovered 46 lakh 36,800 rupee investment you have recovered. Okay, when between year 3 and year 4, between year 3 and year 4. Now listen carefully, understand clearly. By the end of year 3, I recovered 1 crore 6 lakh 90,200. I invested 1 crore 35. In that already 1 lakh 6,000, 1 lakh 1 crore 60 lakh 1 crore 6 lakh 90,200 is recovered. Still, how much is there to be recovered? Let's calculate. 1 crore 6 lakh 90,200 minus 1 crore 35 lakhs, 28 lakh 9,800 I need to recover. For recovering 46 lakh 36,800, if 1 year is required, to recover 28 lakh 9,800, how much is required? 28 lakh 9,800 divided by 46 lakh 36,800. It is 0.606 years. 0.606 years. Okay. And what do you mean by 0.606 years? Year 3, 3 years fully I have taken, and extra 0.606 years I have taken. 3.606 years is our discussion. If you want to convert this 0.606 into years, into months, into 12 you do, this will be 3 years, 7.27 months. Okay, wow. Everyone, please give a reply first. Understood this discussion clearly or not? Everyone. Okay. Now, this is a class work for you. For project B, hey, one second, one second, one second. See, I will first show you one point. We got 3.606, and we can write it as 3.61. That's all. This they got 3.61. Okay. Institute has done this much bigger up to here. You forget about everything. Follow my procedure. Never it will go wrong. 3.61 years. Okay. Now I will give you 3 minutes to 4 minutes time. I want project B answer every student have to do. Discounted payback you do for project B. 4 minutes time. Actually, I should give only 3 minutes. Extra 1 minute time because it's the first problem. Completed. Have you completed, everyone? Okay, very good. So we have now completed project A and project B. Discounted payback period. Correct? Discounted payback period. What is the discounted payback period of the second project? Discounted payback period for the second project. See here. You might have got the same answer. 4.187 or 186 like that. 4.190 you can round it off. Everyone please confirm, did you all get this answer? Everyone give me a reply. Did you all get the answer? Okay, done. Now what is the next question he asked? He asked for profitability index and NPV. If you calculate NPV, profitability index can automatically be calculated. Okay, so let us compute NPV. Write down NPV, year cash flow, PV at the rate of 16%, PVCF 4, 5. Everyone please do it properly. Don't neglect. Up to here everything is same. Do it. You have to do it. Okay. So cash flows are given. Present value of future cash flows also we have to calculate. Total then. Discounted cash inflow. Okay, discounted cash inflow. 22 lakh 29,000 plus 84 lakh 61,200 plus 46 lakh 36,800 plus 39 lakh 98,400. Yes, 193,25,400 minus the discounted cash outflow 1 crore 35 lakhs. NPV positive 58 lakh 25,400. Do it. Project A I have done na. Project B you will do and tell. And for project B, this is for project A. Project B, you need not do all these things. Just for practice sake, we have done now. You can take the final discounted, cumulative discounted cash flow total will be there now for project B. That you can take minus discounted inflow, discounted outflow if you deduct, you will get NPV. Did you all understand what I said? Payback period computation, you will do cumulative. Even in this NPV, total is 2 lakh 1,93,500 minus 1,35,000 will be the NPV. Like that, you can directly calculate and tell. Tell me for project B. How much is the answer for project B? $34 lakh 81,200 positive. I don't know the answer. Since students are giving, I am writing here. I will show you at the end. Okay. Let us check with the answer. Yes. project A 58 lakh 25,400. These they have given in thousands, that's why 58 lakh 25,400, perfect answer. And 34 lakh 81,400, 34 lakh 81,200, perfect answer. Okay, so we got the answer also for discounted payback and NPV. Profitability index is nothing but discounted inflow by discounted outflow. Okay, NPV in a different way of expression. Okay, number of times we will tell. Okay, number of times. Discounted inflow divided by discounted outflow. What is the discounted inflow? 1 crore 93 lakh 25,400 divided by 1 crore 35 lakhs 1.432 or 1.43 times. What do you mean by 1.43 times? It is used when to tell how bigger my inflows are when you compare with outflows. Means for every 1 rupee outflow I spent, or for every 1 rupee investment, it has given me an inflow of 1.43 times in discounted form. In what form? Discounted form. So in PI you won't take cash flow, you take discounted inflows. Means what? Even after discounting, still it is giving me 1.43. Okay, and in a simple way, shall I tell you? Listen, I invested 1 rupee in the project. I invested 1 rupee in the project. Means I invested a capital of 1 rupee by taking money from some person. See, whenever you wanted to invest in a project, you require money. Who will give? Either equity should give, or debt should give, or both should give. When I say equity, take equity, share capital, preference share capital, and reserves and surplus. Don't debate with me on those points. Now we are not doing ratios chapter to bifurcate them and see. Here everything is same. So whenever I am investing in a project, someone have to give the money. At what is this? This 1 crore 35 lakhs, I am not printing the cash. Someone have to give me. Who is that someone? That someone can be equity, or that someone may be debt, or sometimes maybe both also. Correct? They all will give me. How much they gave? 1 rupee they gave. That 1 rupee I have to give back to them or not? The principal part. I took 1 rupee from you, means I have a responsibility to give you back your 1 rupee. My project has generated that much of cash flow. I am able to pay you back 1.43 for your 1 rupee. You are asking only 1, but I am capable of paying you 1.43. Are a concept of PA. Much bigger the PA, much better the project will be. Everyone, please give me a reply. Understood the meaning and science behind the PA or not? Everyone. I want a reply. I don't want your silence. Okay. Yeah. Now, for project B, you should only tell. I did not do now. Project B, you should only tell. Discounted inflow by discounted outflow. Directly you do and tell me the answer. How much? How much is the PA? How much is the PI? I am going with your answer. 1.145 or 1.15. 1.145 or 1.15. Anything is okay. So you can write 1.15 directly. Perfect. 1.43, 1.15. All of you have got 10 marks in the exam. Okay. Next question. I am not going to spend extra 1 minute also unnecessarily. I have much more bigger works to do with you. It is study material question. Already I have done in the regular class. I am not going to do it again. No waste of time. New questions is our target, not the old questions. This question is MTP 10 marks, mark May 90. In May 90. So let us do this question. Okay. X Limited is considering to select a machine out of 2 mutually exclusive machines. Sir, what is mutually exclusive? Mutually exclusive means you can't take up both. You can take up only one among both. That's called as a mutually exclusive. Either this or this. Mutually exclusive means if you accept one, you will exclude one. If you exclude one, automatically you are accepting another. That's called as a mutually exclusive. Mutual means 2, minimum 2 is required. Exclusive means mutually exclusive means one among them will be selected, remaining all will be excluded. Here there are two machines. We wanted to explore and understand which one to buy. Okay, let's see. Cost of machine 30 lakh, 40 lakh. Expected life 10 years, 10 years. Annual income before tax and depreciation 12 lakh 50, 17 lakh 50. Depreciation is charged on straight line basis. You are required to calculate discounted payback, NPV, and profitability index. Okay, different question. See, what is the difference? Let us first envisage what difference will it make in this question. See, previous question la, if you observe, capital outlay was given. Correct? Capital outlay. Next one, data whatever they have given here, we assumed them as cash flows and started doing the answer. Correct? And what is our assumption? These are all cash flows. Okay, but for all those who are listening, I just wanted to tell you one very, very important thing. Regular class students, power playback students, my students directly, once upon a time, you all know this logic. For those who are coming for the first time and listening here, they have also have to understand. So whatever I discussed for 1 hour, 2 hours in our class, I will not, but 10 minutes I will spend to explain you the difference between income or profit versus cash flow. Versus what? Cash flow. See, in capital budgeting or in finance, we will not consider profits for decision making except in exceptional cases. You should remember my words. Except in exceptional cases. Some exceptional cases are there. Except there, profits are not considered for decision making. Okay, but I'm not telling profits are irrelevant, but we don't take them for decision making. Clear? And what we have to do, we don't want profits, we want cash flows. We want what? Cash flows. Okay, now question, why cash flows? Okay, why cash flows? Let us understand clearly why we require cash flows and why not profits. Why not what? Profits. Okay, so cash flows are always considered superior to profits because of three different reasons. How many? Three. I can give lot many reasons. 6 reasons are there, but at CA inter level, you can't understand inflation, all those things in deep. So basics only I will tell you. So just spend 10 minutes time. Everyone will understand, or those who already covered my classes, at least refreshment will be there. You will refresh the concept one more time. So let me first explain you the significance. Okay. First of all, I want one yes from all the participants. Are you all with me? Shall we start? Okay, now listen. Now question is, what is the significance of cash flow over profits? Okay, see, there is a CA1. Same examples what I gave in the regular class I am giving, such that those who listen to the class also, yes, they will connect the example. I can give different example also, but all the people will now find it very new. So therefore I will give the same example. Everyone will connect to do this. There are two chartered accountants, chartered accountant 1 and chartered accountant 2. I am a client to them. You people are chartered accountants. Okay, you people feel yourself as CA1 and CA2 both. I came to you as a CA1. I gave some data relating to me. Okay, I gave some data relating to my business. I said, sir, please prepare P&L account and balance sheet. I wanted to get my financial statements audited. So please audit my financials. You only prepare the books of accounts also. I said, books I will prepare. I will give you the financials. On that basis, you prepare the financial statements and close everything. Okay, well, anyway, this is not a big company. Don't tell that us or as per auditing. Okay, as per Companies Act, section number 143, section number 141, duties of auditors. Don't tell all those things. Example, take it as an example only. Okay, so you are a CA1. Okay, you being a CA1, you are doing two works. You will take my data, prepare financial statements and audit them. This is your work. Okay, don't tell, sir, as per 144 of Companies Act, auditor not to render certain services. First service bookkeeping, sir. Enna sir, you are a chartered accountant, you are asking us to do. Don't do our action. We are talking about finance. Are we keeping away the company side? Logic you keep away. Concept only you understand. There are two chartered accountants. Okay. I asked them to prepare P&L and balance sheet. Okay, P&L and balance sheet. They started preparing it. CA1 has taken life of asset. Life is always a accounting estimate. So different people will have different estimates. So CA1 estimated life of the asset as 5 years, whereas CA2 estimated as 3 years on the basis of usage. Okay, on the basis of usage. CA1 have taken depreciation on the basis of SLM. CA2 WDV. Stock valuation, CA1 has done as per FIFO. CA2 has done on weighted average method. Bad debts percentage on total profit, total debtors, CA1 considered 1%, CA2 considered 3% debtors. Bad debts on the debtors. Okay, well, next. So, like that, accounting policies, accounting estimates, accounting principles followed by both the CAs are two different policies and principles, and all are correct only. Because accounting estimate life, so you can estimate anything. Next, I can tell you this. Salvage value. CA1 assumed no salvage value. CA2 assumed 20,000 salvage value of the machine. Okay, now you have to tell me, I will listen. Profits calculated by CA1 and profits calculated by CA2, both are similar or dissimilar? Same or not same? Tell me only that. I don't want extra conversation with you now. Yes or no, that's all. One answer. Both are same means yes. Both are not same means no. Tell me. And what we understand, both are dissimilar. They will never become similar. Both are not same. And one from this, what you have to understand, Kaushik Mukesh is same person for all the two chartered accountants. My data is same. Fee paid is same. But CA1 gave one profit, CA2 gave another profit. Okay, what you understand? Profits are always dependent on estimates, policies, and procedures and accounting principles. So everyone can follow a different procedure, different estimates, different principles. Because of that, profits tend to change between any two chartered accountants. Correct? Now, second example. I will give you 500 rupee notes. I gave to CA1, I gave to CA2. 500 rupee notes. What is 100 rupee note? Cash. So I gave 500 rupee cash. 500 rupee notes to A, 500 rupee notes to CAB. I asked them, count and tell how much it is. CA1 said, for 500. CA2 said, 500. I asked, oh, both sides same, huh? Yes, sir, it is same. When profits are changing, why these are not changing? These are why it is same. Sir, this is cash, sir. Cash means already it is there on hand. So it will be same. That's the first reason. Cash flows are certain. Profits are always uncertain. Cash flow coming is uncertain. I'm telling cash flow will be same for both. Certain cash flow will come for all the three. All the two people. Correct? So first one, cash flows are, rather than writing it as certain, cash flows are same in valuation to everyone. Okay, same in valuation to everyone. So cash flow, if I give one data, cash flow cannot be different for two different people. It will be same. This is one reason. Reason number one completed. That's why we always consider cash flows, not the profits. Reason number one. Reason number two. Whenever you raise capital, okay, you have to pay something to the person giving money. Example, company balance sheet. Company raises finance through equity and company raises finance also through the debt. Equity I should pay KE, debt I should pay KD. Correct? Forget about preference and resources. Don't complicate the issue now. So I will raise the money either through equity or I will raise the money through debt. For equity, I should pay KE return. For debt, I should pay KD return. Both I should pay KO return. Correct? So now what you have to understand. So what is this KE? What is this KD? Or what is this KO? Nothing but they are the PV factor. PV factor means what? Return. What is it? Return. Return expected or return paid by the company. Okay, this is what they will ask. Clear? Now listen carefully to the point. Okay, listen carefully. I went to a bank. Listen carefully means carefully listen. I went to a bank. I gave them 10 lakh rupee cash. To whom? To bank. Who gave? Kaushik Mukesh has given. How much? 10 lakh cash. Bundle of cash I have given them, or check I have given. They took the check encashed. They deposited in the bank account. And they started paying me 8% interest. Okay. What is this 8% interest? It is the return that I am getting. You call it KEKD. That is none of our business. It is a return that you are getting. On what? On your investment of 10 lakhs. On your investment of 10 lakhs. So for 10 lakh rupee cash you invested, you are getting 8% return. Correct? So 8% is the return that you are getting for the cash flow that you have invested. Okay. Second situation. There is another person. Okay. There is another person. He is Mr. A. A also went to the bank. KM went to the bank and gave 10 lakh. Na? He also went to the bank. He went with a P&L statement. He went with what statement? P&L statement. A went with the P&L account statement. In that P&L, net profit is 10 lakh. Net profit is 10 lakh. Okay. And this is audited, signed by a chartered accountant in practice. Means it's audited, filed with ROC also, registered, officially legal document. He also went to the bank. He went to the bank after Kaushik Mukesh and he gave that P&L account to the bank. And he said, deposit that 10 lakh rupee in FD. Okay. He said, thank you very much, sir, but where is the cash? He said, there, see there it is. Banker asked, where, sir? There, sir. Chartered accountant, signed on that. So take that. Sir, this is P&L account, sir. 10 lakh rupee profit. 10 lakh rupee profit audited. Shareholders approved. Filed with ROC. ROC registered. MCA website, my financial statements are there. If you have a doubt, you see there. Profit is 10 lakh. So that profit you deposit. Sir, give the profit. Sir. No. P&L account you deposit. Profits can't be deposited. In a clear sense, how to understand? On profit, you cannot apply PV factor, which is a return. Banks won't give returns on profit. Bank gives returns on cash flow. So second reason why always cash flow is superior. Na? Returns are paid on cash flow, but not on profit. Everybody please answer. Understood the point clearly? Yeah? Everyone. Okay. So returns are paid only on cash flows, but not on profits. Okay, the reason. Next, third very important reason. See, I will deposit in FD with the State Bank of India 1 lakh rupees. State Bank of India will give me 8% return. How much? 8% return. State Bank of India is risky or risk free? Risk free. Until there is a risk or no risk? No risk. There is a concept. High risk, high return. Low risk, low return. No risk, risk free return. Don't tell no risk, no return. Then where is the concept of investment in risk free places? So high risk, high returns. Low risk, low return. No risk, some return called as a risk free return. Okay. State Bank of India is high risk, low risk, no risk, no risk. And they will not give any return. They will give you return. How much return they will give? 8%. Then what you should call risk free return? Why you pay me risk free return? listen carefully. Okay, see, whenever you are giving money to someone, whenever, listen carefully. You will be in a different world. You will forget about these concepts. When I started doing inflation related questions, please listen carefully. I can't repeat the points again and again in this class. Please listen. I repeat. Whenever you are making investment in any project, or when you are giving money to someone, what you mean by giving money to someone, you are losing an opportunity to use it, and you are sacrificing your needs, and you are giving to some other person. That concept we call as giving money to someone. Giving money to someone is not a simple task. Yeah, you are losing an opportunity to use that amount, and you are giving that opportunity to someone to use it. Correct? At that someone, for the sacrifice you have done. What sacrifice you have done? Not using it for your purposes. They have to pay you na. First thing they have to pay for the risk. Pay for the risk. What do you mean by risk? If cash is with me, I will use it immediately. But since I gave it to you, you will give me after 1 year or 2 year or 3 years. 3 year or 4 year means it's uncertain. What will happen after 3 years? How would I know today itself? So it is always uncertain. Future is uncertain. So I am putting money in an uncertain place. Uncertainty gives me risk. For that risk, I will ask a compensation. That's called as a compensation for risk taken. This is one segment. So whenever I call return is a PV factor. PV factor is made out of two things. Factors. Number one, risk. Whenever you are putting money in something, there is a risk involved in that. What is the risk? Uncertainty of getting the cash flow. If you invest in Government of India bonds, uncertainty will not be there. Therefore, risk will not be there. If you invest in State Bank of India, uncertainty will not be there. So risk concept is not there. But still SBI is paying you 8% for what? For the second variant they are paying. What is the variant number 2? Variant number 2 is inflation. What is it? Inflation. See, I am giving money to State Bank today. How much money? 1 lakh. How much money? 1 lakh. You are not risky. Therefore, for risk, you don't pay me anything. Okay? I will give you 1 lakh to the SBI. SBI will pay me again 1 lakh only after 1 year. Let us say no interest is there. Okay? They will pay me back same 1 lakh again after 1 year. Now, what will happen? Let us see. Today, I gave 1 lakh to State Bank. Today, I gave 1 lakh to State Bank. Okay. After giving 1 lakh to State Bank, 1 year after I went, State Bank of India said, good morning, sir, take your 1 lakh. I took my 1 lakh. I went to a shop. I wanted to buy something. I said, sir, iPad 1 year back, I asked you, 1 lakh. Please give me that iPad, I will buy. He said, no, sir. Now, because of inflation, iPad cost increased to 1 lakh 8,000, he said. Last year you said 1 lakh, sir, inflation, sir. Prices are increasing for Apple products. 1 lakh product has become 1 lakh 8,000. You give me extra 8,000, I will give you iPad. You said that, or you did not tell all these things. Last year you said 1 lakh. I thought that 1 lakh will continue for lifetime. Sir, how it will continue, sir? Inflation will be there. Prices of products will increase. So therefore, I can't do anything. You have to suffer the inflation. So pay extra 8,000. Therefore, for tackling that inflation only, State Bank of India will give you that 8%. So this 8% is a risk-free. That's why in most of the problems we do, risk-free rate if they give, you should consider it as an inflation rate. Or if they give inflation rate, consider it as a risk-free rate. Everyone understood the point clearly or not? My shouting is over here. So inflation will affect the cash flows. Inflation won't affect profits. Profits like depreciation also will be there. Profits are what will be there? Depreciation also will be there. Depreciation is a cash flow, a real cash outflow. No, it is a non-cash flow. Okay, it is a non-cash item, depreciation. Okay, depreciation will depreciate. Why it will appreciate? Inflation, why it will affect depreciation? So profits can't be applied with inflation. Cash flows only can be applied with inflation. So PV factor like inflation path can be applied only on cash flows, not on profits. Because of all these reasons, another 3 reasons are there. See, finally we will discuss them. So for inter-level, these are enough. Okay, I took exactly 13 minutes to complete this. Okay, so whenever in exam in capital budgeting chapter, they gave you profits. They gave you profits or incomes and no data is given. Then take it directly as a cash flow. But if data is given, please compute cash flows again. How to compute? See, they will give you profits. You have to arrive at cash flow. How to arrive? I will tell you through income statement. Okay, sales minus cost, EBIT minus interest, EBT minus tax, EAT. Okay. Now question. Sir, what is this cost? Further I am bifurcating. Sales minus operating expenses minus depreciation, EBIT minus interest, EBT minus tax, EAT. And what we have done, depreciation is deducted in computing EAT. And EAT is nothing but profit. In this profit, there is an element called as a depreciation which is deducted. But depreciation is not a real cash flow. So what we have to do, EBIT, EBT, EAT computation, already depreciation is deducted. But it should not be. What we have to do, add back that depreciation. Then sales is a cash flow. Operating expenses are cash outflow. EBIT is a both inflow, cash flow and non-cash flow is there because depreciation is involved. So we will add back the depreciation here such that EAT plus depreciation we call as cash inflow. So cash inflow is EAT plus depreciation. Remember this formula. Understood everyone? Bad. Reply fast. I'm waiting for your reply. Yes. Understood. Can I believe all of you are? Can we continue with the question now? Okay. Let's continue. Now we are having a full license to start with question number 6. Learn and do. See how your mindset should be during the class. Okay. During the classes, concept oriented classes, first of all, everyone tell me, we are doing only problems. Problems through concept. Normally, capital budgeting, what we will do in regular class, we will go in a sequence. From the fundamentals, we will start. Accounting rate of return means what? Accounting rate of return models are what? Weighted average we have to take, or normal we have to take. Then we will come to the concept of taxation, impact on depreciation. Slowly we will come. But now what we are doing through questions only, we are learning the concepts. Are you all understanding the difference between the regular power play and this one? Clearly, everyone. Those you have already taken, you should definitely see a difference. Directly we are going into the problem. In that problem concept we are discussing. Okay, so there is a unique methodology to understand. And again, I said that there is one good news for all of you. Let me explain what it is. See, from 14th of this month or 15th of this month, I am having FM classes. Okay, at Chennai. Chennai FM classes are there. Okay, I will be starting with capital structure, leverages, dividends, like that. 8 days I am going to complete FM for them, full day class. Full day class means morning 9:30 I will start, evening 6:30 I will end. 7 days classes, 7 to 8 days. You all can get free access in YouTube live. 7 days you spend properly. From 14th to 15th I will announce it very soon. 1-2 days I will tell. 7 days you attend. Entire FM will be completed because anyway I am taking for them in Chennai. I am trying to give that live to all my students. Clear? Morning you do whatever you want, evening you do whatever you want. In that 7 hours, 8 hours time, you perfectly do. FM will be completed. Regular class, yes. Regular class. For them only cost of capital I completed. So cost of capital I will discuss to you at the last. Remaining all the chapters, we will go along with the flow of the class. 8 days exactly. 15th if I start now, 15, 16, 17, 18, 19, 20, 21, 22, max 23, because it's housing question, extra 1 day you should take. So 8 to 9 days, fully FM will be. Then after what we will do, 24th, 25th, after what is our plan? After that we will focus completely on, okay, after that complete focus will be on law and DT, okay, law and DT. Then happily by mid of the August itself we will complete everything and we will start the test series also. Clear? Huh? Everyone reply. Is it okay for all of you? So why I got this idea? Na? Actually, I have no plan to go. I thought instead of taking small bits and pieces, at least one subject if I can complete in a stretch for 7 days or 8 days, na, beneficial also for those who are writing group 2. Na, they need not concentrate on group 1 live, etc. They can directly complete it. I will concentrate on group 1 after that. Clear? Everyone, did you feel this useful for all of you? Everyone? And class will be streamed only live. Okay, wa? Live if you listen, you will listen. That's all. Half an hour after, 45 minutes after also will not be there because it has to run through institute. So this itself is a great thing. I need to talk with them, but I took a decision directly. So live if you attend, you will attend and you will complete, or else gone. I'm telling very seriously. Again later, please don't blame me, which I don't like. Because I have taken this decision to benefit large. See, in every 100, I can't satisfy all the 100 with the timings. Okay, at least 95 it is okay, na? Very good for me. Working capital, I have already uploaded. Now you listen to them. At that time, you need not attend live. Now you can study some other subject. Okay. So if you wanted to attend a face to face, for only FM, you can contact ICOM classes. When FM classes are going to conduct, only for FM, if you want to attend, you can attend there. Ask them, they will give the details. So face to face, if you want to complete, you can complete. Veshmamlan, it will be started. Okay. Okay, well? So anyway, let us come back. This is what the news I wanted to share with all of you. I hope this is useful for everyone. That's why I just wanted to tell to everyone. Okay, well? So this is the point. Okay, remaining details when other subjects will be there, all these things I will give you very clearly. Okay, but one thing, FM once completed, we will dedicate complete time only towards law and DT. For law DT also I will do like this only. What I will do, I will put 3 days to full day classes for law. Okay, such that I can complete chapters like charges, deposits, auditors, accounts of company. Okay, along with the interpretation of statutes, LLP, all these I will complete in that full day sessions of law, such that syllabus will be completed fast. Concepts and question bank also we will do simultaneously. Okay, well, I said we are going to do big this time for September. Your work is only one thing. Whenever I put the YouTube live, you please attend to the class. That's all. That's the greatest favor you can do to me and to yourself. Okay, well, because I also have to manage 100 things and I need to put these classes. So timings, if I tell there is a change one day, now please accommodate your timings, because to be very frank, you are not as busy as me, correct? I have office, I have classes, physical classes, CA final DT, CA final AFM, CA interlaw law, CA interlaw FM, CA interlaw DT, CA foundation law. These many things I need to maintain through timings. Are you clear? So when I say live timings, you please attend at that time. That's all. Okay, that's the only thing that I expect from all of you. Please do not question why this, why that. then I have no other option. Now in this only I have to put my commitment and clear. Okay. Yeah. So anyway, let us now continue. So FM, all these things you need not worry. Yeah. At least some people may get doubts, sir. We are going little slow. Whether 3 subjects will get completed by September, and I mean before the August 2022, like that, will they get completed? Now I think you might have got a confidence now. Once FMA completed by 22, 23, from 23 to 30 we complete entire law. Then we will sit only on DT and we will start for 10 days and we will complete. So August 10th we will close everything. Are you all clear? So by 10th August, if we can back the 15th August, if we can clear, 15th to 25th, a lot of exams let us write down. After that, you will write your accounts exam. I will see you in CA final. See, as I said from the beginning, okay? As I said from the beginning, my intention was you should clear this September, okay? Any secondary, it will come later, no problem. Okay, if I sell my CA final sale now, you will get fainted now. So therefore, that is all these things are not my point. Okay. So finally, AFM sale, if you see mine now, you will get fainted in directly now. You will fall down and you will. So therefore, my point is never see a inter to do something to earn money, all these things. Let me do some favor to CA inter students. They will pass now. They will be happy because there is only one stage after that. Okay. So therefore, please ensure that you are attending the class regularly. Okay. Whenever I keep the class, please attend. That's it. More than enough for anything. Okay. Now, see. Question number 6. X Limited is considering to select a machine out of 2 mutually exclusive. Company's cost of capital 15, corporate tax 30. Other information, machine 1, machine 2, 30, 40. Expected life 10, 10. Annual income before tax, before depreciation 1250, 1750. Depreciation on SLM. Okay, let us start doing it, please. Sir, what is the difference between previous questions and this question? Because anyway, is asking discounted payback, NPV and PI. Sir, already we have done the question. Why we are again doing waste of time? Then you are wasted. You are not understanding the difference between both the questions. First difference, number 1, between that question and this question. Mutually exclusive project we are doing here. Difference 1. Difference number 2. Here they gave income. We have to calculate profits. Number 2. Here tax adjustment is there. Number 3. Here cash flows are annuity cash flows, not multiple uneven. In the question, the cash flows, what are these cash flows? Multiple uneven. Na? So 1 year 30, 1 year 1 crore 32, 1 year 84, another year 84. But here, what is there? Same cash flow of same inflow will come every single year here. Correct? So this is annuity cash flow question. That is a multiple uneven cash flow question. 4 differences are there between that question and this question. So it is imperative for all of us. We have to do. And moreover, discounted payback period, we are not going to compute in that manner. Different manner we are going to do here. That's why this question gained importance. Okay. Shall we all do it, everyone? Yeah. See here. First, write down. Question bank will be available in my website from today evening onwards. Whoever want, you can take. Okay. Okay. X Limited is considering to select a machine out of 2 mutually exclusive machines. Company's cost of capital is 15%, corporate tax is 30%. Other information relating to both the machines is as follows. Machine 1 and machine 2. Cost of machine 30 lakhs, machine 2 is 40 lakh. Expected life 10 years, 10 years. Annual income is given. Depreciation is to be charged on straight line basis. You are required to calculate discounted payback, NPV and profitability index. Write down. Step 1. Calculation of cash flow. Calculation of cash flow. A. Depreciation. Machine 1, machine 2. Cost of machine 30 lakh, 40 lakh. Write down properly. Don't do direct answers. They don't give you the marks. You will cry at the end when results come. Please. I'm telling very seriously about this. Life. 10 years. 10 years. SLM depreciation per annum. 3 lakh. 4 lakh. Okay. There is no scrap value. So we are not considering anything. Or else we will calculate cost minus scrap or salvage value divided by life. Since they followed what basis? Straight line basis in depreciation model. Okay, well, so now we have done with A bit. B. Calculation of cash inflow. Profit before depreciation and tax. Profit before depreciation and tax. Annual income is profit before depreciation and tax. 12 lakh 50, 17 lakh 50. Do along with me. Minus depreciation. 3 lakh, 4 lakh. Profit before tax 9 lakh 50,000. 9 lakh 50,000. 13 lakh 50,000. Minus tax at the rate of 30%. 9 lakh 50,000 into 30%. 2 lakh 85,000, which becomes 6 lakh 65,000 profit after tax. 13 lakh 50,000 into 30%. 4 lakh 5,000, which when reduced become 9 lakh 45,000. But we got profits. We should add back the depreciation. 3 lakh, 4 lakh. Cash inflow is 9 lakh 65,000, 13 lakh 45,000. Calculate up to here, everyone, and everyone has to give me a reply. Understood the concept clearly? Yeah, everyone. Okay, see here once. Please, I want your observation here, please, everyone. 9 lakh 65, 13 lakh 45. 9 lakh 65, 13 lakh 45. So, like this, first we have to do the computation of cash flow. Computation of our cash flow. Okay. Now, question will come. Write down. Step 2. Step 2. DPBP. Discounted payback period. Discounted payback period. Discounted payback period. Like in the previous question, we need not do. Please listen carefully. I will tell you how. Okay. So, we have to calculate discounted payback, NPV and profitability index. All the three we have to calculate now. So, discounted payback period, if we have to do, listen carefully. Discounted payback period, machine 1, machine 2. We have to do on the basis of annuity cash flow. Why annuity cash flow? Same cash flow is coming every year. 9 lakh 65, 9 lakh 65, 9 lakh 65, 9 lakh 65. For 10 years, you will get like this. Discounting at 15%. Discounting at 15%. Okay, well, so we have to calculate first present value. What is the cash inflow per annum? Right now, machine 1, 9 lakh 65,000. Machine 2, 13 lakh 45,000. Okay. PVAF, annuity factor. Okay. 10 years ki 15% calculate 1 divided by 1.15. 5.019. 5.019. Discounted cash inflow 48 lakh 43,335. 67 lakh 50,555. Okay, 67 lakh 50,555. This is discounted inflow. Okay, va? Just to do it here itself, discounted cash outflows 30 lakh 40 lakh. So payback period, NPV and PI. Let us do in one single stretch. 40 lakh. 40 lakh. 40 lakhs, 40. NPV 18 lakh 43,335. 27 lakh 50,555. Do it up to here. PI, discounted inflow by discounted outflow. Okay, PI 48 lakh 43,335 divided by 30 lakh, 1.61 times 67 lakh 50,555 divided by 40 lakhs, 1.69 times. PI also over. First of all, everyone tell me, have you all completed up to here? I want a reply. Please don't sit silent. Are you all clear up to here? Okay. Now. Okay. Great. So let us start. See, final touch. Discounted payback period. Simple logic here. Very, very simple. See, discounted cash inflow is 48 lakh 43,335. Correct? Outflow you kept is 30 lakhs. Outflow you kept is how much here? 30 lakhs. Discounted cash inflow is 48 lakh 43,335. Outflow is 30 lakh rupees. Okay. So this discounted cash flow, if you consider, you have taken for 10 years. Okay. 10 years you recovered this much of discounted. 30 lakh rupees, how many years you have to recover is a question now. Okay. 30 lakhs you have to recover in how many years? 48, 43. 325. Okay, wow. Now you try doing this particular answer. I will wait for your answer, everyone. Try. Don't see the answers. Don't see anywhere. You try on your own with your mind. Logic, I told you, what is a discounted payback? What is the time taken to recover the principal back is called as a discounted payback. 2 minutes only I am giving to you. Apply your mind. One more minute. No, not like that. Not like that. Check the question properly one more time. Everyone completed? If you say yes, you have completed, I will tell you what you have done, what mistake you have done, everything I can tell. Okay, na? Okay. Now, listen carefully to the concept first. Okay. Apply your mind here. Listen carefully. See, roughly I will first do and I will explain. Listen. 9,65,000 I will get per annum. Correct? How much? 9,65,000 per annum I will be getting a cash flow. Forget about discounting factor first. Okay, let's say it's not discounted payback, it's a payback. 30 lakhs divided by 9,65,000 na 3.109 years you will recover everything. Yes or no? Up to here you tell me first. Did you understand what I said? 30 lakhs is our outflow. 9,65,000 we will get per annum. If it is not discounted, directly what we will do? 30 lakhs divided by 9,65,000, 3.1 years or 3.11 years it will take to recover back our entire principal. Do you understand up to here clearly? Yeah? Okay. Okay. Now you understood. Now my question is, but we wanted to do discounted. We wanted to do discounted. We will go by trial and error method. What method? Trial and error. What do you mean by trial and error? Let us take for 4 years discounting. 9,65,000 na 1 divided by 1.15 for 4 years you take. We get 2.85 into 9,65,000. The 4 years ki PV factor. So 2.85 into 9,65,000, we got 27,50,250. 27,50,250. Discounted. This is discounted part. Okay. We want 30 lakhs to be recovered. Means 4 years we recovered discounted inflow of 27,50,250. Calculate like that for 5 years now. Calculate for 5 years. 1 divided by 1.15 for 5 years. It is 3.35 into 9,65,000. So 9,65,000 into 3.35 will give you 32,32,750. Got the answer now. So see here. We want 30 lakhs to be recovered. For 4 years, we recovered 27,50,250. For 5 years, we recovered 32,32,750. Correct? So in this 1 year span, we recovered 27,50,250 minus 32,32,750. 4,82,500. 4,82,500. But we don't want 4,82,500 full difference. We want only difference between these two. 27,50,250 minus 30 lakhs na 2,49,750. Okay, 2,49,750. One thing is clear. My discounted payback period will be 4 years plus 4 years plus for 1 year. If I can recover 4,82,500, for recovering 2,49,750, how much period might have taken? 249,750 divided by 482,500 equal to 0.52. So 4.52 years is the final answer. Whatever the answer students have given in the group is wrong. Absolute wrong answer. Everyone has given wrong answer. Everyone has given wrong answer. First of all, I want one answer from all of you. Did you understand now or not at least? Doing a mistake not a problem. At least you should learn from the mistake, na? Okay, that's it. So if you apply your mind, you will do. You are just doing mechanically, na? That's why you couldn't do. Now I will ask a question here. Okay, most of you might have already attempted FM paper. Already you might have written FM exams. So many things you might have already done. But no one have given a right answer means you should question your learning first. I am very serious about it. One person also did not give right answer means where this class is going. You have zero basics about payback. I'm sorry to say this. Okay, but we can learn now. We can rectify all our mistakes. But what learning you are doing? The first we should ask that question to ourselves. Are we learning in a proper way, or we are doing expected questions, or we are doing some guess type, or we are doing on a selective basis? Question yourself first. If a proper question paper comes, no one will qualify the exam. Pass percentages are like that. You should learn everything, understand each and every point. Okay, see, I will ask you honestly. Honestly, I will ask a question. You should give with that much of honesty again. When you see this question, okay, when you see this question, you might have felt that this is a easy question, correct? How many of you felt like that? Honestly, you tell. When you see the question, how many of you felt that this is a very easy question? How many of you felt that way? Answer, yeah, everyone. Are you sleeping or what, everyone? Then everyone might have felt like that, all participants. Now, answer big zero. That's why I said don't underestimate any question. You don't know what will be there inside it. Okay, I know everyone will think like that. Why he's doing unnecessarily all these questions, a waste of time. Now you will understand whether it is worth the time or waste of time. Okay, so if I do something in the class now, you can confirm that some new point we are going to learn in that question. In this discounted payback with annuity cash flow. Okay, so how to do the machine number 2? Those who did not understand this, at least listen to the explanation I'm giving for machine 2. Machine 2. Okay. See, I'm taking the data, I'm copying the data. Okay. I'm just copying the data. Okay. So let us see. After copying the data, what I'm going to do. This is machine number 2 key. Let us go on a trial and error basis. Let us go on what basis here? Trial and error basis. Let us move on. Trial and error basis, if you go 13,45,000 you are getting now. Let us check for 4 years, let us check for 5 years, let us check for 6 years on a trial and error. If it is between 4 and 5, now super, we will directly do. If it is not, now we will go for 6 year also. 4 years K discounting factor 1 divided by 1.15, 2.85. Already we have done 2.85 something. 5 years K 3.35, 6 years K 1.15, 2, 3, 4, 5, 6, 3. 1 divided by 1.15. 1, 2, 3, 5, 6. 3.78. 3.78. Sorry. 13,45,000. 13,45,000. Let us first do this computation. 2.85 into 13,45,000. 38,33,250. 3.35 into 13,45,000. 45,05,750. How much is our investment? 40 lakh. Oh, super. Then this answer also will be between 4 and 5. So sixth not required. Sixth not required. Okay. So now the question. For 4 years, my recovery is 38,33,250. For 5 years, it is 45,05,750. And for a change of 1 year, my cash flow change is 38,33,250 minus 45,05,750. 6,72,500 is the increase. Okay, but our desired value is 40 lakhs. Our desired value is how much? 40 lakh. So what is the change? What is the difference? 38,33,250 minus 40 lakhs. 1,66,750. I will do this way. Okay. So for it took 1 year to recover 6,72,500, but to recover 1,66,750, how much time is required? 166,750 divided by 6,72,500, 0.25 years. 0.25 years. Okay, 4 years plus 0.25 years, 4.25 years is the payback period for project 2. So project 1 it is totally how much? 4.52. Project 2 is 4.25. So I want an answer. Did you all understand or not? Okay. 2 minutes time I will give. Copy down this. Please copy down. Observe the answers also. Don't sit idle. I am giving the time for you. So both the answers you have copied now. Understand what you have done. You just recap everything. 2 to 3 minutes time I will give. Once after that we will go to the next question. Completed everyone? First of all, give me an answer. Did you understand the new methodology that you learned now? Discounted payback concept. Did you all understand clearly? Yeah. Okay. That's it. Next one. Next one. See 4.51, 4.24. We got 4.52, we got 4.25. Small difference. That is okay. Okay. So with this we completed this. We are going into next question. Okay. Let us see question number 7. Question number what? 7. Frame Limited has a maximum of 8 lakhs available to invest in a new project. Three possibilities have emerged and business finance manager has calculated NPV for each of the projects. Initial cash outlay NPV. Determine which investment or combination of investment should the company invest in if we assume that the projects can be divided. Good question. Read it. Mock test already it was tested for 6 months. Read the question. Again, I am telling you, we are not going in the sequence. We are going in the sequence of the questions in concept oriented batch. Whenever a question comes, in that question, whatever the concept is there, I am going to discuss about that. So randomly, we are going to discuss entire capital budgeting. Concentrate properly. Normal power play batch, I will make you to learn from the beginning till end in a sequence. Linear fashion we will go. But here this is not linear, it is curvilinear. Okay, it will be going on a zigzag manner. And this question is asked on capital rationing. One of the learning objectives is there na capital rationing. This okay. Have you read the question? First confirm, have you read the question? Okay. Now, listen. I have some important points to discuss before we start with solution. Okay. Please look here. I have one or two important points to discuss before we start with. Listen. First point number one. What is the concept of capital rationing? Let me explain. Okay. Capital rationing. Why we are learning this suddenly? Question is on capital rationing. We are doing which batch? Concept oriented batch. What is the agenda of our batch? We will take a question. In that question, the concept we are going to understand. That is our agenda. So therefore, let's go by the theme of the class. Capital rationing. There are two words. Capital. Capital means what? The fund. Rationing means what? Distribution of a limited fund among various is called as a ration. We will call a ration. Rice is there. Okay. Ration card. What is ration? Allocation of limited resources among various people is called as a rationing, such that no one will get excess, no one will get a deficit. So we will be planning to distribute in such a way everyone will get the part of the benefit out of it. That's the idea behind the rationing. Here, what is rationed? Rice, sugar, what is rationed here? Here, capital is getting rationed. Limited fund is available, but more needs are there. Let us see how we will tackle. Okay, see. Prem Limited has a maximum of 8 lakh available. And what he's saying, rationing is there. 8 lakh limited capital available. But I have 3 projects. Number one project, alpha, beta, and gamma. Okay, 3 projects are there. First, we will go by whatever gives higher NPV, that project we have to select. Everyone repeat, project with higher NPV, we have to select. Yes or no, everyone? Project with higher NPV, we have to select. Yes or no? No. Don't give yes. Don't give yes. Don't give yes. Wrong answer. Wrong answer. From now, students also will give answer no. So stop your answers from there. Answer is no. So listen. Why na? That's the discussion we are going to have. Okay. See. Reasons I will tell you, not like just giving yes or no answers. I will give the reasoning also. Okay. Listen. Outflow. There are 2 projects. Project A, project B. Outflow 100 rupees, outflow 70 rupees. Inflow, let us say 150, inflow 130. 130. Okay. Inflow means discounted inflow. Discounted inflow. NPV 50. NPV is 50. Let us say 115 this is. Okay. NPV is 45. NPV is what? 45. Now, if you observe NPV which is good, if you ask now, I can clearly tell that one is outflow of 100, another one is inflow 150 discounted. So NPV is 50. Here 70, 115, NPV is 45. Like this I will tell. This is the NPV model. Now I want a PI. Discounted inflow by outflow. 150 divided by 100, 1.5. 115 divided by 70, 1.64 or 1.64 or 1.64. Now what happened? When you see NPV, project A is better. Project A is better. But when you are comparing 2 projects, NPV comparison is not always right. Not always what? Right. Therefore, calculate PI such that you will know how much inflow you are getting for 1 rupee outflow. So if you start project A, for every 1 rupee of outflow, you will get 1.5 rupee inflow. But here for every 1 rupee of outflow, you will get 1.64 inflow. So when to use NPV, when to use PI is a question. Okay? When to use NPV, when to use PI is a question. NPV is always used for independent project analysis. PI will be used when you have to compare 2 projects using NPV. You didn't understand that? Listen again. NPV will be used for independent project analysis. Sir, what does it mean? See, after the project A, I should take or not to take a? You should take because there is a positive NPV. Project B, should I take or should not take a? You should not because project NPV is negative. Project C, accept or not to accept? Accept because project cash flow C is positive. So for independent project analysis, NPV is the Maharaja of capital budgeting. Over. Now we have taken 3 projects: project A, project B, and project C. Okay. Project A, NPV positive, accept. Project B, NPV negative. Project C, NPV positive. And first, what we understood, B we should not take up. First, you negate that concept of B. So project A and project C are having NPV positive. Okay. Now between these two, which one to select? Then PI will be used, not NPV. Did you understand, everyone? Why when we have to use PI and when we have to use NPV? Honestly, you should tell how many of you learned this for the first time. This comparison. When to use NPV, when to use PI. How many of you learned for the first time? Please tell. I want your honest answer. That's the greatest thing you can do. Yes, for the first time. Do you know why? In regular class, I only didn't tell that any time. I didn't. I think I forgot at that time to tell. There is no chance you will already know. There is no chance. Reason I only did not tell in my regular class. Never I got this idea at that time when I'm taking the regular class. Suddenly I got a doubt. Why students should not get this kind of doubt? So first time I am also discussing in the class. So what is the logic here? Whenever independently you wanted to analyze a project, whether to accept or not accept, go by NPV. You have 5 projects. In the 2 rejected, 3 are selected because of positive NPV. In that 3, which one to select? Again NPV, so you should not compare. Then PI will be the comparison. And multiple projects comparison ki PI. Multiple projects analysis ki PI. No, sir, I don't want to do multiple projects. I want that project whether to accept my NPV. Understood, everyone? I hope every one of you have made some good learning today in the class, right? Okay. So Prem Limited has a maximum of 8 lakh available to invest in new projects. 3 possibilities have emerged and the business finance manager has calculated NPV. So when 3 projects are already having positive NPV, you should not compare these and tell beta is good, alpha is better. Okay, sorry, gamma is good, beta is alpha is better, beta is the best. Like that, you should not tell on the basis of NPV. NPV is used only for individual project analysis. Okay, and how to analyze this question? There might be 10 projects. In that 10, 7 have got negative NPV. 3 have got positive NPV, those are selected first. In that selected ones, which should be selected is the question now. Or in that selected ones, which should be given first priority is the question 1. A priority we should raise on the money. Clear? So what we have to do, Alpha Limited has given a outflow of 5 lakh 40, NPV of 1 lakh. First we need to calculate PI. First we need to calculate what? PI. Start. Question number 7 in the question bank. All these are RTP, MTP questions here, not there in study material. If you do, you will get confidence in the subject. 10 marks to 12 marks, the capital budgeting will come. Final students are literally crying in AFM. Capital budgeting, they are not even understanding because at that time I did not take them for FM. So they are not even understanding what is NPV. So at least the last 2.5 years, the students have taken enormous classes for FM. They got a lot of clarity now. So final it will be very, very useful. I'm telling you. So if you want to go into CFAs, if you want to go and do as a CFO job in a company, capital budgeting is a prime requirement. Yeah. Learn properly. So anyway, first step 1, calculation of PI. Okay. Investment, alpha, beta, gamma. Alpha, beta and gamma. What is the outflow? 5 lakh 40, 6 lakh, 2 lakh 60. What is the discounted inflow? NPV is given. What is NPV? Excess of discounted inflow over outflow. Means what? My inflow is 6 lakh 40, NPV is 1 lakh. 6 lakh 40. Do you understand that this adjustment? 5 lakh 40 plus 1 lakh will become the inflow, discounted inflow. Did you understand the meaning, everyone? Seven lakh 50. Okay, wow. 2 lakh 60 plus 58,000. 3 lakh 18,000. So, what is the PI? Inflow by outflow. 6 lakh 40 divided by 5 lakh 40. 1.19. 7 lakh 50 divided by 6 lakh. 1.25. 2 lakhs, 3 lakh 18 divided by 2 lakh 60. 1.22. Hey, you should observe. Project A has given 1 lakh NPV. This has given only 58. But when you take the PI, this is better than that. Are you understanding? Okay. So, first one 1.19. First one. First one is 6 lakh 40 divided by 5 lakh 40, 1.19. Next one 3 lakh 18,000 divided by 2 lakh 60, 1.22. Next one is 1.25. Okay, so now first what we have to do, we are having 8 lakhs with us. Okay, write down rank 1, rank 2, rank 3. So don't go by NPV. When multiple projects has to be analyzed, NPV is only for individual project analysis. When multiple projects with the NPV selection comes, PI is the model. Okay, so therefore rank 3, rank 1 and rank 2. Like this it has to go. Okay, let us now start. 8 lakh is there. First, where we have to invest our money? We have to invest in the best PI project. What is the best PI project? Project Beta. Project Beta, how much we need to spend? 6 lakhs. Outflow. This will give me how much NPV? 1 lakh 50. Okay. Next, project 2 I have to take up. Sorry. Project Gamma I should take now. Project Gamma requires how much? 2,60,000 it will require. Hey, up to here everyone have copied. First tell the answer. I'm just writing down. Whether you're following or not, I don't know. Give me one reply, everyone. Okay. Yeah. So now what we will do? Project Gamma we should take. We require 2,60,000. But we have only limited requirement of limited fund of 2 lakh. Project is divisible or indivisible. Projects are divisible projects. What do you mean by divisible project? Divisible project means I need not take entire 2,60,000 project. I have only 2 lakh now, up to 2 lakh I can take. For 2,60,000 if you get, okay, for 2,60,000 if you get NPV of 58, for 2 lakh how much you will get is a proportionate one. So here what is the NPV? Here what is the NPV? 58,000 into 2 lakh divided by 2,60,000. 2,60,000. So 2 lakhs divided by 2,60,000 into 58,000. 44,615. Okay. You will get two projects now. Totally you will get 1,94,615 as NPV after capital rationing. 1,94,615 after capital rationing. See here, 1,94,615. Perfect answer. 1,94,615. 1,50,000 plus 44,615. Everyone understood? Understood, everyone? Okay, done. So with this, we'll stop for this. So good amount of concepts we learned. Next class is the targeted questions. I will tell you first. Let us first have a clarity. We have computed this part now. Study material questions anyway we are not going to do. So we will start doing some new questions and big questions we will concentrate. Okay. Yes, this is one question we can do. Wow, very big question here. Yeah, that's why this question came for, see here. This question came for 10 marks. So this question we will be solving. And we will solve all 10 marks questions first. Small questions anyway you can also do. Big question, see, this is another question. Dangerous. Another 10 marks question. We will do this. So we will do another 3 to 4 10 marks questions in the next class. I told now, slowly learn the capital budgeting. Big chapter now, slowly let us learn. Okay,